In this video, I will backtest this 5-minute scalping strategy created by Online Trading Signals to see if it could actually generate a steady 7% profit per day. I will backtest it 100 times with an initial account size set at $1,000 with a 1 to 1.25 risk to reward ratio. I will also improve this strategy towards the end of the video, so make sure you stay focused and learn this amazing technique I'm about to show you. Like, subscribe, and turn on those notifications so you don't miss out. Now, without further ado, let's get into it. Okay, I'm going to be doing my backtesting on BTC versus USDT, and the creator of the strategy mentioned that it works perfectly well on the 5-minute time frame. This strategy consists of 3 well-known TradingView indicators. So first we need to navigate up to our indicators tab, and the first indicator we will be searching for is the parabolic SAR. For the second indicator, let's add our 10 in 1 different moving averages, which is this one by He-Man Shoe. And the third indicator we need to add is our squeeze momentum indicator, which is this one by Lazy Bear. Okay, now we need to make some slight adjustments to these indicators. So first, let's double click on our EMA and change the length from 200 to 100, and we'll also change the color from red to green. Let's also make our parabolic SAR green as well, and we'll be keeping the inputs on the same settings. Okay, the strategy is complete. Now let me briefly explain how these indicators work. So first of all, let's start with our parabolic SAR. This indicator basically appears as a series of dots placed below or above the price action. If the dots are above the price action, the market is considered to be in a downtrend, and if the dots are below the price action, the market is considered to be in an uptrend. Every time the dots shift below the price action, the price will more likely continue to rise, and the exact opposite is true when the dots shift above the price action. We also have our exponential moving average in the chart, and this is going to be our baseline. This indicator will help us eliminate bad signals. And for our third confirmation indicator, we're going to be using our squeeze momentum indicator. This indicator shows the periods when volatility increases or decreases. In other words, when the market goes from a trend into flat movement and vice versa. The black crosses on the midline show that the market just entered a squeeze, thus signifying low volatility. The grey crosses signify the opposite, a squeeze release. However, for this particular strategy, we're not going to be taking into account these crosses. All we need is this histogram. Okay, now you know how these indicators work. Let's actually understand how to trade with this strategy. So for a long position to be valid, we first need to have the parabolic SAR shift below the price action. And once we have that, we will place a horizontal line at the very last dot, which was above our price action. Now we basically want the price to breach this level. This means that the price has to cross and close above it. This breakout can happen at any time during the parabolic SAR being bullish. The price action and the horizontal line have to be positioned above our baseline. And finally, we need to have the squeeze momentum indicator colored in green or being really close to turning from red to green. And as you can see, we managed to get our close above this level. So once we have all of these conditions met, we will go ahead and place a buy order on the close of our trigger candlestick. Our stop loss will be set below the candlestick we had the bearish parabolic SAR signal on, so around this level. And our take profit target will be set at 1.25 times the risk. We see that we managed to move towards our take profit target. Opposite is true for short positions. We first need to have a new sell signal issued by our parabolic SAR. Next thing we do is we place a horizontal line at the very last bullish parabolic SAR dot. We also have to remember that the line and the price action have to be closed below our baseline. Okay, now we're going to be waiting for a breakout. Also note that a wick is not considered as a breakout because the price didn't cross and close below the line. So we see that we actually got our breakout on the next candle. We see that the squeeze momentum indicator is also about to turn from green to red. So we'd be opening our short position on the close of our trigger candlestick. Our stop loss will be set slightly above the candlestick that we had the last bullish parabolic SAR signal on, and we're going to be targeting 1.25 times the risk. Alright, let me give you one more long example. We see the price action and our parabolic SAR dots are positioned above our 200 EMA. We managed to get our long signal from our parabolic SAR, and then we're looking down towards our squeeze momentum indicator to see if it is colored in green. So we'd be placing our horizontal level on our last bearish parabolic SAR dot and waiting for a break of this level. So here we can see that we managed to get a close above it, so we would be entering our long position on the close of our trigger candlestick. The stop loss will be set at the low of our most recent bearish candlestick, which is this one here. And then we are going to be targeting 1.25 times the risk. Another successful trade. So I hope you have understood the rules for this strategy. Let's get on to our backtesting and see how profitable this strategy really is. Okay, so after 100 trades, the win rate for this strategy is 57%. To be honest, I did expect it to be a bit higher with such a low risk to reward ratio. We also increased our account size by 71.39%, and I found those 100 setups within 2 weeks. So that's an average profit of around 5% per day, which is really close to the numbers promised by online trading signals. Our profit factor is 1.66, and we had 5 consecutive wins against 4 consecutive losses. So yeah, pretty good results to be fair. However, I do believe we can improve this strategy so that it gets even better results. Okay, so I do have an idea on how we're going to improve this strategy by eliminating even more losses when the market is ranging. For that, we first need to add our second moving average. So double click on this, and in our input section, we're going to be ticking another SMA here, and we're going to be changing the length to 50. Also, let's change its color to red. And the second step will be to get rid of our squeeze momentum indicator and add the HVI indicator to our chart instead, which is this one here. Now let's change some parameters on this. We'll double click on it, and we're going to be changing our divisor from 3.6 to 1. Okay, the setup is now ready. Let's quickly understand the trading rules. So the rules are pretty similar. For a long position to be valid, we first need to have the parabolic SAR shift below our price action. And once we have that, we will place a horizontal line, just like we did in the previous strategy. So the candlestick has to cross and close above the line, which we managed to do on our next candle. The price action and the horizontal level have to be positioned above both of our moving averages, and the 50 SMA has to be positioned above our 200 EMA. And for our final confirmation, we need to have a green bar printed on our volume histogram as soon as we got our new buy signal. So we'd be placing a long position on the close of our trigger candlestick. Our stop loss will be set at our parabolic SAR dot, which is just positioned below our price. And this time we will be targeting 1.5 times the risk. Another successful trade. Exactly opposite is true for short trades. So the 50 SMA has to be positioned below our 200 EMA. The parabolic SAR has to shift above our price. If the bearish breakout does not happen on the very first candlestick, we can wait while the parabolic SAR is being bearish. But we see that we actually managed to get that close below on the first candlestick. Also, the price action and horizontal line have to be positioned below both of our moving averages. And then our final condition is we have to have a red bar printed on our volume histogram. So we would safely enter our short position on the close of our trigger candlestick. Our stop loss will be set at our parabolic SAR dot. And once again, we're going to be targeting 1.5 times the risk. Another important rule to understand, if for example you had a breakout but the volume wasn't quite there yet, you do not wait for it to catch up. You just skip this trade and look for better opportunities. So you can wait for the breakout, but you cannot wait for the volume. Another successful trade. Okay, I hope you have understood the rules for this strategy. Now let's do our second backtesting and see if the results are any better. Okay, so the second backtesting is done, and the win rate for this strategy is 61%. We also increased our account size by 175.99%, This is really good, however it did take me a bit longer to find those 100 setups. I managed to find them within 36 days. The profit factor has also increased and we had 9 consecutive wins in a row against 4 consecutive losses. This is quite amazing. You can definitely try to improve this strategy even more, and if you have any ideas, please let me know in the comments down below. Okay traders, I hope you enjoyed this video. If you did, please leave a like, comment, subscribe, and turn on those notifications so you don't miss out. I love you all. Peace.